September 9th, 2009. This is the bond market update. Well, folks, bonds are now in a very seasonally bullish period. If you had bought bonds today and held them to the 11th of November, you'd have made money 13 out of the last 15 years. So the way that can happen again is if the market was to put in a double top here, the stock market, and start heading south and taking out some pivots, and we go into the seasonally weak period for stocks going into late October. So that would be the catalyst for bonds to stick here, put in a little base, and then break out to the upside. And it is kind of interesting, folks, when I look at the Grail on the weekly charts, I see a setup very similar to last September, right before bonds had a huge explosion up to the highs, to those kind of bubble peak highs of last November. That was the big fear trade where everyone rushed into bonds and out of everything else. So it could happen again. Why? Well, because we've just completed a giant rally in the stock market, and there's a ton of complacency, and nobody's expecting a crash in the stock market, of course. But if you had some kind of dislocation, you could see money run into bonds. The bear case for me on bonds is there is massive supply coming out